the mortgage world knew what to, at least we had expectations that the Fed was going to move 0.5%, and they did. So prior to the actual Fed meeting and the announcement, we started to see some improvement.
Hello, everyone. Welcome to Mortgage Minute. My name is Matt Thomas. This is Brian Dewald. Brian, there have been some interesting things happening with news regarding the Fed. Probably by now, everyone knows that the Fed dropped the federal funds rate by 0.5%, right? So 50 basis points, as they say in the industry. The market wasn't surprised, though, and interest rates did not go down. What happened?
Well, they never do, right? I've been through well over 100 Fed changes. What's interesting is that this is the first drop they've had, I believe, since 2022. And,
four years, actually. I think it's in 2020. Sorry about.
Oh, has it been that long? Thanks for the correction. I knew it was a long time, and welcomed, right, by most of the industry. So they were delayed in getting it done. My world was expecting 50 basis point cut. I firmly believe that if the Fed's only cut a quarter, 25 basis points, that our mortgage rates would have gone crazy up, right, in the wrong direction. So, really what we like to explain to folks is that I made a social media post that went sort of viral a while back, and it says, in anticipation of the Fed meeting, here are a few things to remember. So the first one is that the Fed does not control mortgage rates. They control the overnight rate at which banks lend each other money, if they're a member bank of the Fed.
Apples and oranges, if you will. They're both fruit.
Apples and oranges.
There's some connection, but they're not the same thing.
They both say rate. Yeah, they both say rate, right? Yeah. The other thing that's kind of crucial to know that is, when the Fed lowers interest rates, what happens is investors will oftentimes stocks rally when Fed lowers interest rates. So, if you're an investor and I'm an investor and we each have $100 to invest every day, and we see stocks start to rally because the Fed made a movement, which happens the vast majority of the time, we're going to take our money and put it into stocks and not into bonds. And mortgage rates follow bonds very, very closely. So when bonds start to fall, mortgage rates increase. So luckily, we didn't see a huge uptick. However, we did start to see these downticks prior to the Fed meeting because the mortgage world knew at least we had expectations that the Fed was going to move 0.5%, and they did. So prior to the actual Fed meeting and the announcement, we started to see some improvements. And then as soon as it hit, it wasn't a lot, but we started to tick up a couple millimeters here and there. It hasn't made any significant damage, right? We haven't seen rates lower either, and certainly not a direct correlation. We don't go from 7% to 6.5% just because the Fed mentioned something. So, anyway, it's always good to talk about this. Yeah, the media gets it wrong, right? Now, the good news is it does start to create a little bit of a buzz in the real estate industry, right? Everybody thinks rates get better, which is fine. But I like that we have this sort of a platform so that we can educate folks to tell them exactly what happens and why.
Yeah, I saw a lot of the news outlets immediately reporting this. I literally saw them saying that interest rates had gone down 0.5%, and that they immediately reference real estate. So I don't pay attention a lot to the news in terms of, just the mainstream news, or turn it on and see what they're saying at 10 p.m. kind of a thing. But I happened to catch some, and that's exactly what they said. And I was like, boy, they're just, they're just misleading people. So, but the good news is, I think, Brian, is obviously right now. So if you were to go back a year from right now, we were on the precipice of heading towards a little over 8%. In October of last year. Right now, we're looking at the low sixes. And as we've mentioned 100 times, we don't quote rates, but if I were to look at a resource for rates right now, I would see that they're probably about 6.15 or 6.2 in that area. And again, that's based on what you qualify for. But we are seeing that is creating some movement, with there being standing inventory in housing better than we've seen, in past years. That's really creating a better opportunity for buyers. And the video that we did last week, and I wish that more people had seen this, we're going to put another link to it so that you can go back and watch it. We really want to encourage you to check out what rates right now are doing, and with seller credits and concessions, how low you can buy down those rates and really make things happen. I think totally different than what a lot of people think rates can be right now. You can get into the fives. I did hear radio commercials quoting getting into the fours. That's That seems maybe. Can you get into the fours? That's great.
Yeah. We got somebody on an FHA loan into the fours. It's
Wow.
easier than a lot of folks anticipate. And again, there's just so many opportunities right now for buyers out there that it's, in every market there's opportunities, but it's there's some sweet spots out there for sure. And we're seeing the vast majority of our contracts coming in with concessions to help obtain lower rates still. So.
Anything else that's noteworthy to share right now, Brian? Anything that you're seeing regarding either applications or contracts and some success stories?
Yeah. Well, this doesn't happen to be directly related to real estate as far as buying and selling, but we're seeing some, refinance applications starting to tick up a little bit. I am having lots of conversations with folks about, the move up buyer has been very stagnant for, the last year or whatever it's been. And a lot of folks are starting to come out of the woodwork and get excited about moving. And, now that things are a little bit more affordable, it was really hard a year ago, right? When somebody's got a 3 or 3.5 or 4% interest rate. When we're talking 8%, 8 and 8 somewhere there, it's really hard to make that move. But, when we start seeing things tick down into the 5s and things like you're talking about, things become a lot more manageable. So lots of conversations, lots of applications. Folks are starting, like I said, to get excited about moving again.
Awesome. Now I'm starting to see a lot of conjecture about where rates are headed. And, I know that's just, that there's no way to absolutely know. But do you have any anticipation of where rates might move in the next either between now and the end of the year or into spring?
Yeah, I mean, it's kind of like you said, it's tough. It's who's got the clearest crystal ball, right? Is always kind of the question. And it's I think we're going to continue. I think that the days of higher rates are behind us. What that means in the future, I'm not sure anybody really knows. I know that the Fed has vowed to continue to push rates down, which they need to. They're still not going to be at levels below COVID, which is unfortunate, but we'll see. And as those conversations happen and they talk about rates coming down, we'll see that before the Fed, just like in this last go around, right? We saw improved rates before the actual Fed announcement. Well, I think we'll continue to see that. I just don't know at what pace or what numbers or, anything there. So we'll just have to stay tuned and see what happens.
Yeah. So if you're looking for a correlation between, when the Fed makes a move and, interest rates, for instance, you're not going to see it necessarily same day.
Right.
Like you said, I mean, we've been seeing interest rates coming down in anticipation of this move by the Fed. So, if that continues to hold true, you're going to want to watch what's going on with interest rates specifically before you ever hear news of the Fed making additional rate cuts.
Yep. True story.
Well, sounds good, Brian. As always, we encourage people to have conversations with you or me. If you have a conversation with me, we're going to talk housing. If we have a conversation with you, I'm going to have them, get down to the nitty gritty on mortgage rates and the possibilities of what the numbers actually look like. You can run scenarios and help people understand what's really possible right now with the rates being what they are and given their specific financial situation. Until next time, we'll see you.
Thank you. Good to see you.